A day of fair amount of chop and churns, as predictably would be the case. First, just a trade setup of the kind of landscape that we were trading in as we walked into trade. The global markets, remember, overnight you had a 650 plus point move coming in the Dow in the positive and closed in with 500 points gains. So that said, you had a decent handover coming in from the US equity markets, but that was not all. There was a lot of chop and churn which transpired from where they finished off to up until when we were trading in today's session. So yes, you did have the Dow futures swing both sides quite viciously. You had positives, you had a negative move coming in, and largely we were trading in a bit of a limbo, as would predictably be the case on such a crucial day when you have the US election verdict coming in. The market is bound to react in such a volatile fashion. Volatile it was, and so was the case with our markets as well. Asia managed to close in with a bit of a mixed bag, largely in the positive. Europe, although it started off in the negative, soon covered ground, and so was the case with our markets as well. But there were quite a few definitive trends which stood by in our market. By the way, we managed to close with roughly about 100 odd point gain, managed to claw back to that 11,900 mark. What really stood out today was the defensive nature of the market. You had a good comeback coming in from IT with names like TCS, HCL Technologies, Wipro, all holding out very, very smartly in trade. Pharmaceuticals as well. Sun Pharma reacted to its earnings. You had a good comeback coming in from a Divis Labs. Cipla held out very smartly. And these were a couple of names which from the defensive universe managed to gain ground. Also, what really supported the market today was after 2 days of a thrashing, Reliance rebounding about 3% odd. So that definitely had a bearing on the way the Nifty managed to hold out. What did not look good today was at the broader markets. They were the ones which were in a bit of a limbo, and some of the fancied names like a Root Mobile, or for that matter, even a Laurus Labs, saw some heavy selling coming in. Root Mobile after its earnings which were delivered today. What took a step back in trade today were some of the banking and financial names. ICICI Bank, which has really led the recovery and the rebound which played out in banks over the last week or so, that took a bit of a step back today. Add to that an Axis Bank as well, which was down about 2.5%. Or for that matter, some of the other names like a Tata Steel as well as Ultratech Cement, Bharti, HDFC Life, which were also a bit on the laggard end in today's trading session. From within the liquid universe as well, names like a BHEL and LIC Housing Finance, UPL, and Godrej Properties, which was the big loser today, which was down about almost 5.5%. So yes, the chop and churn in the market is only going to continue up until you have a definitive trend and a decisive mandate as to who is it going to be now at the White House next, whether it's going to be a red or a blue victory. This chop and churn is bound to continue for the equity markets. For us, although you have to say that we were far resilient than what was anticipated. I mean, one would think that given how close a call it was in last check, the markets would really be going haywire. For a day like that, for the market to actually hold up about almost 1% is really not bad a deal. Most market men now believe that what transpired in the last 10 trading sessions, the fact that we've actually come off from the top across global markets, not just US, as India as well, the market is much digested all the chop and churn, and some of the negatives are already priced in. From a very near term, what's really going to matter for the market is going to be whether or not there is going to be a stimulus which is going to be announced, and whether it be the Democrats or the Republicans which actually overtake the White House, a stimulus is a given. At least that is what the market understanding is as of now. So maybe that explains the kind of resilience that you had from the market today.